What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode, we're going to do some more stock market technical analysis, and we're going to start out by looking at the ticker symbol SPY, which is the S&P 500 ETF. Now, before we get into the video, go ahead and smash that like button and subscribe to the channel for more future videos just like this one. Now, let's crack into these charts and see what's going on in the stock market today. All right, so based off today's close, we still have a little bit of the gap above left. So now the gap is from $330 to $332. So we keep eating away at this gap, and it's getting smaller and smaller. So the upside to finish closing this gap is down to 0.6%, which could easily be closed by just gapping up in the morning. However, don't forget, we also have this gap below us. From today's close to close the bottom gap would be about a 1% drop. So this market's doing everything it can to trick everybody, but right now it's still a bull market, and we still have a very bullish upward trajectory. And if we're looking at the 5-wave structure, we still look like we're within the 5th wave of the Elliott wave analysis, and a 1x Fibonacci of the first impulsive move would bring us up to a price target of about $341. So any close of this gap above will be the end of the resistance, and there really won't be any more resistance until the previous all-time high at about $338 way up here. So we'll talk about that as resistance if we can close this gap, but right now we still have these two gaps below us, with one being small and more recent. And if we zoom in here to a 1-hour chart, we see that this price has been staying above this gap, and it's really kind of just going sideways, except for the last hour in the market today, where we kind of had this nice bullish push to the upside. Now, the longer the bulls can keep this gap below open, it's going to make closing this upper gap easier, because there will be support at this gap level every time the price comes down here and test this level. There should be buying pressure to want to drive the price back up. However, if the market does decide to gap down about 1%, that would put us down here, and we would have another island reversal, which we've saw. If we zoom out a little bit here, we had an island reversal the first time we saw volatility enter this market. So we had the market sort of gap up and stay up, and we had this gap open, and then we kind of had the market kind of going sideways for a while after that. So this is still a possibility with the gap up. The longer that gap stays open, it just takes one bearish gap down the next morning to have this island reversal pattern. Now, it's also worth noting that many times when we had gap ups like this, the price action went sideways before quickly closing that gap. So this gap shouldn't be open for much longer if the market is going to continue doing this gap up, gap down trend, where the gaps get closed a few days later. Again, we see it here. We see a gap up, and we see the hourly chart show that gaps get quickly filled. Another gap up here on 7/14, and again, that gap is closed just a few hours later. So the longer this gap stays open, it gives bulls time to close this upper gap. However, it's just as dangerous to the downside if we get a sizable gap down and it's an island reversal pattern. This gap now will become resistance. Right now, we have it as green because it's support, and it's still an area for the bulls to keep attacking this upside gap and try to close this level between $330 and $332. So if we go back to the daily chart, remember, we're still trading right up on this resistance trend line, and the price seems to be walking up day to day right along this trend line. At that current rate, this gap would close within 2 more days, and that would give bulls very little resistance above until this $338 level. So I would expect to see, if this gap closes within the $332 range, I would expect to see a quick jump to $338 and test this next level of resistance. So right now, there's still a lot of bullish upward momentum, and right now there's really no reason to even talk about being a bear, because we have this nice breakaway of the 5 EMA well above the 13 EMA, which tells us there's a lot of buying upward momentum right now, and it's going to take a couple of days of red to start seeing this trend reverse. But right now, there's absolutely no trend reversal, and there's a lot of strength on the bull side right now. Now let's jump over here and look at the Nasdaq 100, and we had another solid close on the Nasdaq 100 as tech continues to lead the way in this market. Now, we had a very similar situation on the QQQ ETF, where we had this gap up, and that gap remains open. So again, if we jump over this 1-hour chart, we see that there's a sizable gap beneath this price action, and the price action is really just going sideways until the last 1 hour of today's trading. So we'll see if this last 1 hour is a sign of what's to come for tomorrow. But the Nasdaq 100 is at all-time highs, and there's really no resistance that we know of above, because the last all-time high that we had was back in February, which we've clearly broken that resistance a long time ago. So there's no notable resistance on the Nasdaq 100. If we use Fibonacci levels, we can see that we're currently trading around the 1.272 Fibonacci, and the 1.618 is way up here at $280. Now we'll still watch the S&P 500 for any signs of resistance or reversals, but we all know that tech's been leading the way, and that's been a lot of the cause of the strength in the S&P 500 as well. So also still a very bullish trend on Nasdaq 100. We saw the trend try to reverse, but it failed, and we see the 5 EMA breaking well above the 13 and the price continue to head higher. There's no reason to be a bear on this market right now. So let's jump over to the other sectors, and we're looking at the financials, and what a surprise. Financials is still going absolutely nowhere. I mean, this thing is stuck dead in the middle of these trend lines, and it is not trying to break out to the upside or the downside. So there's still nothing exciting going on in the financials, and we're still waiting to see a break to the upside or the downside to further confirm our trend in the S&P 500. Jumping over to the industrials, we see that we got to the end of our consolidation pattern where the resistance trend line and the support trend line came to a head, and we see it's looking like it's breaking in the bullish direction. However, we're still waiting for a confirmation to break above the 200 simple moving average, because that has been the strongest support in the last couple of weeks, and that is also good to see a stock trading above its 200 simple moving average. So if we can continue to break this upper resistance trend line and close above the 200 simple moving average, that would be a great early sign that the S&P 500 is likely to break to new all-time highs. So we're going to continue to monitor this, but remember, it could still break to the downside, so we need to see it close above the 200 simple moving average to confirm the move. If we look at healthcare, it's still going absolutely nowhere, and it looks like it's just trying to eat time off the clock, and it's going sideways. So on the healthcare, we still would like to see a bounce off this support trend line and break to a new high, which would go hand in hand with a bull market, and that would tell us that all of these industries and sectors are ready to move together and break to new highs soon. But right now, there's still no weakness of note in the healthcare industry. We still see the 5 EMA is well above the 13, and we still see price action that is just going sideways, eating time off the clock, which is a good consolidation pattern. And healthcare could just be consolidating, getting ready for its next explosive move up or down. However, I think right now with the current technicals we're looking at, I would have to give the edge to the bulls and say that this is likely to continue to break to the upside off of the support trend line. If we jump over the US dollar, we see that our bounce was rejected today, and we seem to have formed another lower high. Now this is absolutely no surprise with the Fed's fiscal policy. The dollar continues to weaken. However, it would be nice to see this price action try to work its way up here and test this resistance level to confirm the downtrend is still ongoing. However, right now we see no sign that the dollar wants to head higher yet, and we see with today's price action a lot of weakness entering the dollar yet again. On that same note, we see gold had an absolute monster day, as well as silver had an absolute monster day. So we still continue to see the dollar being hedged with these other assets, and gold, silver, and equities continue to rise. I don't expect to see any reversal in these trends until we start to see the dollar show some strength again, which we have yet to see. Now remember, on the VIX, which is our fear indicator, we're still waiting to see the VIX close above 23.5, and today we got to close at 23.8. Now a close below 23.5 would be a great indication that the market is ready to head to new all-time highs, because that is a sign that fear has left the building and the bulls are back in business and there's no fear of any downside left. However, we still have fear in this market until we close below 23.5 and see the VIX start to go lower. Any sign that the VIX bounces off of this support level will tell us that fear is still in this market and we will not see new all-time highs just yet. We'll continually monitor the VIX at this 23.5 level, and it's becoming to the point now where we're only a day or two away from knowing how these trends are going to continue. It's also worth noting that Apple is a market mover, and we see Apple has these two huge gaps of the price action here where there's been no price discovery in these ranges. So Apple is in a point where I say it's in tech FOMO, because we really just see people flooding into this stock, and even though it is a great stock, you don't like to see a stock move in this way where it's leaving all of these gaps open. So I wouldn't be surprised that when the market decides to go through a cool off, we're going to see Apple lead the way with the correction. So Apple stock will be a great indication of a market cool down when we see Apple start to top out and we see it price action start to close these gaps before it heads higher. Now, one thing to note is that momentum can be dictated by the size of the candle, and we do see Apple's green candles starting to get smaller, and we see these upper wicks where people are starting to sell at these higher prices. That doesn't mean Apple has to come lower, but it is a sign that buying momentum is slowing and we're starting to see more sellers at these higher prices. So I would not be surprised to see Apple cool off, come down, close these gaps before it could head higher. So right now on the S&P 500, the number one thing we're waiting to watch is financials and industrials to see if they're going to break to the upside and the downside, and we're waiting to see this upper gap close so that the bulls can run this sucker to new all-time highs. The first level of resistance after this gap is going to be this $338 level, and after that we expect to see the Fibonacci level of at least the one extension of 341 price action to hit. That will put the S&P 500 to the new all-time highs, and if we get there, we'll see the technicals and see if we think the market's going to go higher from there or if we're ready for a turnaround. But right now there's a lot of bullish upward momentum, and I don't see that changing anytime soon. So please remember to like this video if it helps you out, and subscribe to the channel and turn on that notification bell so you don't miss any future updates. We do these stock market technical analysis videos every single week. So thanks for watching, and as always, I will see you in the next episode.